G'day there, Investorholics. Today we'll be taking a look at the best Aussie blockchain and crypto focused ETFs. As always, we're looking for the best bang for your buck. So stick around and hopefully we can give you guys some very valuable information. Okay, so let's take a look at the Aussie blockchain and crypto ETF landscape. First up, we will be looking at FTEC, which is the ETFs, Fintech and Blockchain ETF. Second up here, we'll be looking at DIGA, which is the Cosmo Global Digital Miners Access ETF. And lastly, we'll be taking a quick look at CRYP, which is the BetaShares Crypto Innovators ETF. Yeah, let's just dive right into it. Okay, let's take a closer look. So FTEC aims to provide investors with return before fees and expenses that track the performance of the index, which is the iIndex Developed Markets, Fintech and DeFi Index. The index contains about 75 companies, developed markets, drawn from a range of Fintech sub-themes. So the index developed markets, Fintech and DeFi index tracks the performance of companies from developed markets with significant revenue derived from one of several Fintech sub-themes. They are decentralized finance, digital payments, technical data provider and analyzer, financial enterprise solutions, peer-to-peer lending and crowdfunding, personal financial software, tax compliance software, and backend payment processing, trading and trading and capital markets, I should say. So, pretty much exchanges. Point of sale. So companies within the relevant sub-themes will be eligible for inclusion into the index. As I sort of said, there's 75 companies based on market cap, and they'll be chosen as equally weighted. Each theme is capped at 10 companies, except for decentralized finance, which is capped at 20. As always, we can look at the Y factor. So it gives you access to exciting growth companies distributing financial services. This also allows you to achieve diversification, so global diversification in a single trade, and avoid the risk of volatility, or smooths out the volatility anyway. Yeah, so you're sort of not picking individual stocks. So hedge against disruption to traditional banks, where shares are often feature heavily in the Australian portfolio. So pretty much just a bit of diversification away from the Australian banking system, if that's sort of interesting to you. Okay, we had a net asset value of $9.07.8. We had trading above the net asset value at $9.10. Market cap was about 10 million, so this is a relatively small ETF. Management costs is sort of on the higher side, 0.69%. Distribution semi-annually. Unfortunately, at the moment, I'm not really sure about the dividends because this one's only been running for a few months. Major holdings, I'm looking at a firm, Fact Sheet Research, Garner Inc. and Lending Club Corp. As I said, sort of holds 75 companies roughly. Medium market cap of those companies is roughly 22 billion. At the moment when I did this one, we're looking at a PE of 28, roughly 28, and you're looking at a price to book ratio of 4.6, so you know, a little bit on the higher side. If you're searching for a pure play exposure to a blockchain, and this is an ETF for you, I don't think anyway. I think it's got too much sort of that sort of fintech shit in it, to be honest. The focus of this ETF is decentralized finance. Kind of sort of gone through a lot of that before. So yeah, it's not really a pure play sort of blockchain or you know, crypto type thing. It's a bit more of a mixed bag. There are some companies that cross over. You'd have to go back and look at do your research on CRYP and DIGA, because there is a bit of crossover, but my preference would be one of the other two listed just here. So yeah, I think yeah, as a pure play crypto, I think this really wouldn't be for someone that's looking for a bit of diversification in that type of field. So since inception, you're looking at a bit of a loss of 4.84%. So I think really it's only been running since October last year, so it's at 4 months or thereabouts. So I mean, performance really, I mean, it's really hard to tell what it's going to do. And I think, like a lot of these things that have anything to do with blockchain, it's going to be a little bit influenced by, you know, so crypto and Ethereum values and all those type of things. But top 10 here, we're looking at a firm, Fact Sheet, Garner, a Lending Club, Morningstar, Bill.com, Intitu, or however you say that, Nomura Research, Experiancy, and Interactive Brook. So yeah, like I say, they're kind of equal weighted, so you can sort of see they're all sitting around about the 2% or thereabouts. But yeah, I think in reality, I think this is just too soon to actually look at this one. If you're interested in the sort of fintech space, it might be something to keep an eye on, but track record wise, I'd be just keeping an eye on it, and it's quite small, so you know, you're going to have problems with liquidity and that type of stuff. So getting in and out of this, you might have a larger sort of gap between the buy and sell prices, and that might sort of make it a little bit harder for you to get in and out. So, you know, this ETF has a distinct bias towards information tech, so 48%. And also it's definitely biased towards the US, and it sort of holds about 63% American companies. So, you know, you're getting a bit of diversification. I mean, a lot of these companies are global anyway, so I mean, that's really where where your diversification comes from, because they're global type companies. But really, right now, it's too early for me to look at it. It's one you keep an eye on it, but it's really more of a fintech focused as opposed to blockchain focused type ETF. I think if you're looking at specifically blockchain, I think there's better options out there to take a look at. Okay, so let's have a look at the investment objective. So gold is designed to offer investors a simple, cost-effective, secure way to access physical gold by improving a return equivalent to the movements of the gold spot price less any fees. So why do we want to look at this product as an investment? So it gives us some diversification, because typically gold is uncorrelated to other asset classes. So whether you own equities or property or bonds or whatever, gold tends to be uncorrelated, and therefore improve your risk return and characteristics of your portfolio. So traditionally, gold has actually been thought of as real money. So effectively it's just money, and actually can be used as a store of value and a hedge against inflation. So the investment is nice and secure. So let's have a look at some of the other numbers. So we had a net asset value of $241.51, showing just below that at $241.45, market cap of $1.7 billion. Not the biggest, but not the smallest by market cap of the gold ETFs. Management cost 0.4%. PM gold is definitely a bit cheaper than that at 1.5%. Obviously, because it's a physical gold ETF, there's no dividend. Gold, GOLD, is an exchange traded commodity that can be created and redeemed on demand. It trades on the ASX just like a share and is settled and held in an ordinary brokerage account. So whether it's CommSec, NAB, whatever, E-Trade, whatever the account is. Its pricing and tracking operates similarly to an exchange traded fund. There's no credit risk within the product. Each physical bar is segregated, individually identified and allocated. Gold may suit investors who prefer to manage their gold investments within their stockbroking account, along with their other ASX equities and other holdings, international bonds, whatever else you've got there. Some experts suggest holding between 1 to 5% of gold in your portfolio. The main reason for this is that gold is uncorrelated to most other asset classes and can help reduce risk in the overall portfolio. Probably have a look at some of that a little bit more later on. A little bit more in depth anyway, not much more in depth. Also have a look at PM Gold and QAG. So as you can see here from the chart, hasn't gone too bad since inception. So early 2003. So it's had a pretty good run up. If you'd invested $100, you'd be sitting on $461 now, thereabouts. So not too bad. Since inception, you're looking at just a touch over 9% return, which is pretty good. The best return is definitely the 1 year return. So the last year it's gone up 38, almost 39%, which isn't too bad. Definitely one to keep an eye on in volatile times. Okay, so CYRP aims to track the performance of the index, provides exposure to global companies at the forefront of the dynamic crypto economy. So the index is the Bitwise Crypto Innovators Index. So for companies to get into the index, must fall into one or two following categories: pure play tier 1 companies that primarily are focused on cryptocurrency market. The second criteria, or supporting tier 2, large capitalization companies with diversified business interests that include at least one significant public business line focused on the cryptocurrency market. Why factors: invest in one sector with strong growth potential. The crypto economy has been growing strongly, aided by the performance of Bitcoin, Ethereum, and other digital assets over the past 10 years. Within the crypto sector, got pretty good growth potential, supposedly. Gives you exposure to crypto core infrastructure. And CYP provides pick and shovel exposure to the companies building crypto mining equipment, crypto trading venues, and other key services that allow the crypto economy to thrive. CYP invests in up to 50 crypto leaders such as Coinbase, Riot Blockchain, MicroStrategy, and more. It's pretty convenient, cost-effective exposure to crypto economy. CYRP provides focused exposure to crypto economy within the familiar ETF structure. You can invest in CYRP as simply as buying any share on the ASX. So that's one of the key factors, I think. Getting exposure. You don't have to worry about getting a wallet or anything like that. You can buy these companies. Get exposure indirectly to cryptocurrency and other blockchain and infrastructure type plays. So we have a net asset value of $7.92. It's trading above that at $8.42. Market cap of 125 million. Management costs, not too bad, I suppose, but it's a little on the high side. 0.67%. Get a distribution supposedly annually. This is such a new ETF. There hasn't been a distribution. I'm guessing that it's going to be in July. Dividend yield, don't really know that yet. So, as I kind of mentioned before, this is, I kind of like this type of theme, sort of investing in the picks and shovels, driving the crypto economy. As I sort of said before, CRYP provides access to a portfolio of companies leading the rapidly emerging crypto economy in a familiar, liquid, and cost-effective ETF structure. You can sort of sit down and have a look at what the ETF's actually invested in, so which companies it owns. It's quite easy to do. Just hop along to the website, the company website. CRYP can provide exposure to diversification by companies involved in the broader crypto ecosystem. So you're not just investing in one coin or whatever. You're investing in the whole infrastructure, I should say, ecosystem. With a management cost of only 0.67% per annum. That means for every $10,000 you have invested, it'll cost you $67, which I suppose, in the scheme of things, isn't too bad. Looking at net asset value and the price to buy one of the shares in the ETF, looking at a 6% above the net asset value. So pretty much I wouldn't be buying just for the sheer fact that you're paying more than the assets are worth. You get exposure to Coinbase, which is a cryptocurrency exchange platform that makes it easy to buy, sell and store Bitcoin, Ethereum and other cryptocurrencies. Silvergate Capital, provider of financial infrastructure solutions and services to participants in the digital economy industry. Right Blockchain is a Bitcoin mining company supporting the blockchain through rapidly expanding large-scale mining in the United States. So also have a look at FETC and DIGA, because we always need to do our research. As I kind of touched on just before, top holding here is Coinbase, then MicroStrategy, Silvergate, Marathon Digital, Riot Blockchain, Galaxy Digital, excuse me, Bucket Holdings, Hut 8 Mining, Northern Data, Hive Blockchain Technologies. Heard of a few of them. Most of them I haven't heard of. So, you know, there's some benefits, I suppose, sort of. This ETF provides focused exposure companies operating in the crypto economy within a familiar ETF structure. It's kind of touched on before anyway. So just don't make the mistake of thinking that this ETF actually invests directly in cryptocurrencies, because it doesn't. It invests in the companies that manage the infrastructure, as I sort of touched on before. You can invest in CRYP on the ASX just as you would with any other share, quite simple, or any other ETF for that matter. You know, I suppose this also acts as a diversification play, I suppose. So if you actually already own cryptocurrency, Bitcoin or Ethereum or whatever, you know, this sort of gives you a bit of diversification, because you get exposure to the infrastructure behind the blockchain. So if you're sort of interested in that space, this sort of diversification. Yeah, exposure to a newly listed crypto giant. So, you know, you got sort of saying Coinbase before. So the crypto market moves fast. The index that CRYP aims to track has a fast entry rule that allows the index to add newly listed pure play companies one day after their initial public offering, so after the IPO, subject to trading and other index requirements. You know, I think you also got to keep in mind the volatility of the sector. Investors should consider carefully how an investment in crypto companies fits into their portfolio. So as with the coins, a lot of these companies that sort of sit behind this ETF are quite volatile, which means the price of the ETF will be volatile to a certain degree, less than the individual companies, but as a whole, you know, a lot of those companies track the Bitcoin or, you know, Ethereum price, so that'll be reflected in the price of this ETF. So it's only been listed since the 30th of November 2021, so, you know, it's been running a couple of months, so can't really say much at the moment. So since inception, you're down, if you had some cash in this one, you'd be down 2.6%, but a long way to run on these sort of things. Yeah, I mean, you know, you can buy an ETF like this, or you could just go straight to the exchange and buy Coinbase or whatever, you know, so gives you the opportunity to get all these infrastructure, blockchain, crypto infrastructure companies in one basket, so you can pretty much hassle-free almost, you know. Would I invest in it? Right now, I'd say no. I'd like to see what happens for another 5 or 6 months, just to sort of see how the ETF performs, because it's a new ETF, so it's always best to maybe put it on your watch list and just keep an eye on it. You know, with saying that means kind of mean to me it means doing more research on the companies in the top 10 as well, get a bit more of an idea of what they do and how they all operate. Okay, so I suppose we better have a look at the verdict. So the best Aussie blockchain and crypto ETFs. And just a quick summary. I'll always like to just put up the basics on one slide just so we can see what's happening. So in the scheme of things, these ETFs are quite small because they're quite new still. You can see that BetaShares Crypto Innovators is 10 times bigger than ETFs, Fintech and blockchain ETF, and you know, significantly larger than the Cosmos Global Digital Miners ETF. So liquidity's something to keep in mind. I sort of checked how many shares all these ETFs are doing, like trading per day, and pretty much FTech and Digger, you're only seeing sort of 8 to 5,000 trades per day, whereas the B shares crypto innovators ETF, you're seeing 100,000 or whatever, So size wise, I mean that sort of shows you that where the best opportunity is to be able to get in and out of these ETFs, because the worst thing you want, or worst thing can happen, I suppose, is that you get stuck in these things and you can't get out of them. So um, I think fit for purpose. Uh, I think they're all got different strengths and weaknesses. I think if you're looking for sort of more a sort of a blockchain type focus thing, I think FTech probably isn't that. I think it's just too diluted by fintech companies, so I'd be inclined to stay away from that one. If I had to pick from the last two, I'd probably go with the BetaShares crypto ETF, just for the sheer fact that it's got some size, and just from a bigger company as well. So BetaShares is just a much more established company. I think that's really the way to go. If I had to buy into it, that's kind of where I'd go. I mean, you can see the performance. Pretty much all these things are going to track Bitcoin, Ethereum price, and that's kind of been off a fair bit in the last 3 to 4 months or 6 months or whatever it is. So, I mean, that's another thing to really keep an eye on. These type of ETFs are really closely aligned with the price of Bitcoin and Ethereum, and the other bigger size, bigger coins as well. So, I mean, if I had to choose one, I'd probably go towards the BetaShares Crypto Innovators ETF, just the sheer fact that it's larger. But sort of, yeah, I mean, I'm still inclined just to keep an eye on these and wait to see how it plays out a bit. But yeah, if you're desperate to put some money in one of these, I'd be taking a close look at BetaShares Crypto Innovators. I think that's probably the best option, just from sheer liquidity. Just the size of the ETF allows you to get in and out. If you need to trade in and out on a day, you probably can. Whereas the other two, I think you're struggling because they're just so small. So I mean, yeah, that's kind of what I do. Number one is do more research. But I mean, if I had to pick one, if you put a gun to my head, I'd probably pick the BetaShares Crypto Innovators ETF. I think that's going to be a better option for you in the long term.